Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, and the closing trades are looking good if you're a bear because the Nifty is at the lowest point of the trading session. Not a very pretty screen if you're a bull right now because the index is at the lowest point of the trading session, just around that 21,600 mark thereabouts. From the highest point of the trading session, we have given up almost 150 points on the Nifty. For the Bank Nifty, it's been a bigger cut. There's a cut of almost 500 points on the Bank Nifty from the start of the day, but it's more pronounced when you look at the broader markets because for most part of the trading session, they were outperforming, maintaining to hold their green stance. But right now, the mid-cap index has given over 500 points off the highest point of the trading session. So that's not a very good sign that we have for our markets right now. But more importantly, we are not alone in this fall. Take a look at how the European markets have opened. You have the German DAX, which has taken a slide of almost 80 to 100 points right now. French CAC is showing a cut of almost 0.7%, so there's weakness across the board. And the Asian markets too were giving us mixed cues. The pre-market rate from the US as well haven't settled as much right now, but they are all pointing to a bit of a negative start. And that's what is keeping the sentiment a bit tempered in the trading session. Having said that, there's still pockets of green today. So IT stocks are holding out okay. There were reports doing around that $16 billion worth of deals are coming up for renewal in the next few months itself. So that's keeping that space alive. As well as you have Pharma as well as the PSU banking space. That's a bit of a drag on the markets right now. So there are mixed cues coming in across the board. But let's take it ahead with the chartists that are joining us on the show. Kunal Bothra, as always, is with us, and we also have Soni Patnaik joining us to talk to us about the technicals as they stand right now. Kunal, let me begin by asking you a sharp U-turn in the markets right now, but not only at Nifty, but the Bank Nifty, which was showing signs of outperformance for the last couple of days, and then, of course, the bigger cuts coming in from the broader markets.
Good afternoon, Anisha. So yeah, I think for a change, I think we've seen the index ending the week on a slight weakish to negative note, and I think the correction which has happened for the indices has managed to break below some key support levels, at least on the Bank Nifty, because we've managed to break below that 47,900 on the spot levels and 48,000 range for the banking index, which was more like a short-term support for the index from where we bounced off a couple of days back. So I would believe that probably is an indication of possibly change of sentiment for the indices. Now we'll have to wait out for the Nifty to try and also give such kind of signals. 21,600, 21,580 to precise is the signal for the rather is the support for the Nifty. If you manage to break below this level on the spot basis, then we could be looking at the second round of correction, which could combine to the indices. But I think it's more like a correction which is happening into the index and something which has been, I think we've been wanting since the last couple of days because of the way the markets have run up 3,000 points over the last 2.5 odd months.
Fair enough, but if you look at the consolidation, we have been consolidating between 21,500 to 21,800 for the last 7 sessions, and that's broadly the range that we have been maintaining. But Soni, within the weakness in the market, there are pockets of outperformance. Case in point being IT and auto. What do you make of the outperformance in IT and any stock particularly that you would want to flag out in terms of strength in charts?
Good afternoon, and thank you so much for having me on the show. So as you rightly pointed out, today is the day for IT. We've seen in mid-cap ITs, especially stocks like Wipro, Bsoft, even in large-cap ITs, where a lot of momentum has been witnessed. Of course, after a week of underperforming, especially in the IT pack. So it's just that IT, it's just a first day of bounce back. So it would be wise to just look at how the open interest positions are getting added up in IT going forward, then to understand whether there can be a positional trade for any IT stocks as of now. Looking at the overall market structure, because it's a consolidation mode, and both Nifty and Bank Nifty are consolidating in their specific ranges where we've seen today being the Friday, some profit booking is taking place. So it is wise that now that we've seen the correction and both the indices are on the support levels, you can actually play out on a buying strategy. For example, just from the banking stocks that I can see, SBI is still holding quite good, so that would be my first pick. SBI has actually given a breakout above 625, 630 levels. It was its 52-week high. It broke out in December series and is still holding even in the choppiness. So you can buy SBI on these declines, keeping a stop loss of 625 and then look ahead for targets of 670 plus. That would be it's a good risk reward ratio favorable as of now. The second pick would be to buy in Voltas. Voltas, we've seen it has broken above 1,000 levels. Even in today's choppiness, it is holding those, support levels. So Voltas, in any dip around 1,000, you can buy at that level and keeping a stop loss of 990 and targets of 1,040, 1,050.
Okay, some interesting trading ideas coming in there on Voltas as well as SBI. Today, the big buzzers, of course, the tyre space is active once again. So everything from Krishna Industries to Polo Tyres is jumping up quite a fair bit. And then, of course, you've got now Cree, Oracle Finance, Indus Towers, which are also seeing quite a bit of bump up, although the rest of the market definitely has petered down. Not such a great day for some of the smaller banks. Bandhan Bank has been running up quite hard all through this week. That's taking a bit of a breather. It's down about 5%. ABFRL as well on a pause, down about 4.6% as we speak in trade. But let's welcome on board Sunil Subramaniam, find out what he's making of the market texture right now. Sunil, hi, good afternoon. Good to have you on the show. Looking at the DMAT numbers, doesn't seem like the market should have any problem. But the FII participation, Sunil, does it seem like it's going to come anytime soon?
No, I think it will. That's just a pause because of the January beginning. All the fund managers have gone on leave. I'm sure some of the hedge funds would have booked profits in December. They will now look to redeploy that capital. So I think just give it a few days and they will come back strongly, because I think the move in December is a part of a larger move I see till the elections, because I think that's the biggest positive for FIS has been the policy continuity they can expect with the election results going the way of the India government. So I think oil prices are also predicted to be stable over the next few months. So I don't think there are any concerns as far as India is concerned from a foreign investor. Our valuations will always be there, but I think that given our stable growth, if you look at our EPS growth and the market volatility is much less than world market, I think we will continue to receive flows from FIIs. This is just probably the first week of January. It's just a bit of a holiday mood there.
Well, yes, holiday mood. But Sunil, is this the reason that you guys have launched this multi-allocation fund, which is looking at investing right from an equity to a debt to money market instruments and gold ETFs? Tell us what should be the rationale in investing such kind of product in the current market scenario?
So I think it's not so much about the market scenario as much as the fact that we've done a long-term correlation analysis and found that whenever equity doesn't do so well, gold steps in and does well. So it makes sense in any equity customer's portfolio, because countries go through business cycles. There are always unexpected events like COVID or wars that happen when equity tends to react negatively, and more often than not, gold does well in that period. So I think that it makes sense for almost every equity investor to have some proportion of gold in their portfolio. Now you can choose to buy gold through jewelry, you can buy gold nuggets and keep in your locker. On buying gold ETFs, which was an increasingly favorite of investors, the finance bill took away the taxation benefit on indexation last March. So as a result now, multi-asset funds are the only way that you can buy paper gold in a tax efficient manner. So I think what our fund proposes to do is for a moderate investor who wants long-term inflation and fixed deposit beating returns, right, with lower volatility, a blending of gold and equity in the same portfolio achieves a sharp reduction in risk, but with not a commensuration return in reward. So over the medium term, you still can expect double-digit inflation and fixed deposit beating returns with equity taxation. But the rolling returns analysis that we have done for the fund's benchmark shows that if you stay invested for 3 years, then the chances of loss are almost nil, because gold steps in whenever equity falls. So I think that is an ideal product for every equity investor to have some portion of gold. For people who want to not be managing this separately, this represents a tax efficient way of ensuring that your wealth creation happens with the least risk and volatility.
That's quite interesting, Sunil. But what's the, the main counterpart, that's equities. Within the equity class, where is it that you are, concentrating your bets? What are the sectoral exposures and classifications like?
So I would say first that we'll probably be large cap oriented throughout, because we recognize this is for a moderate investor. And so probably small caps will not be a big proportion of portfolio. We'll use 75 to 80% large caps and 20% in mid caps. So that's one. Second is we are looking at the average investor staying invested for 7 to 10 years in this fund. So in a time like that, the business cycles obviously go through. So we would arc the portfolio around the India growth story, which is essentially the manufacturing, consumption and services sectors. So banking, IT, the industrial space, all of these would form a significant part of the portfolio. We run a well-diversified portfolio with 50 to 60 stocks. We have chosen the Nifty50 index as a benchmark. And as you're aware, it has 75% large caps in it. So our portfolio would be large cap oriented, but over the medium term, with increasing FII interest in India, we think that large caps will give you less volatility, but very healthy double-digit returns over the medium term. So that portfolio should serve that purpose.
Right. Well, today, of course, you're seeing the European market start off well into the red, and I guess that is what's been sort of rubbing off on our markets as well. Of course, the Eurozone inflation data is due, and you are seeing the US pre-market rates as well, largely within, snapping their 9-week winning streak. Sunil, if there is to be an aberration in the market, you think that's going to be more global triggered, or would you say the market, because of the run-up that we've had ever since the state elections, is just going to choose to consolidate, buried under its own weight?
See, if you look at it, right, most of the events are taking positive for India. The only thing I would say that is that the private sector capex expansion hasn't kicked off in the way it was anticipated about a year or year and a half ago. That's because I think capacity utilization, after rising sharply post the second wave of COVID to about 76%, has kind of stagnated. So while there are a lot of private sector announcements around capacity expansion, the ground level work hasn't started. So I think a delay in the capex expansion cycle is probably the one key risk, I would say, because a lot of heavy investment has gone into the infra on the anticipation of this big perk up in manufacturing. And so if the story is getting delayed, there could be a reallocation of that same money into consumption and into banking. So I feel that a reallocation within the market is what is more likely than a universal correction in the market. So you'll see winners changing hands, and I expect consumption and banking to be leaders of the next growth in the market. But that might come at the cost of infra and manufacturing from a stock market perspective. Bear in mind that from a medium term, I don't see the manufacturing as dropping in share of the GDP. I see it growing, but the stock market always goes through these valuation cycles, and there I feel that there could be some reallocation of money within the market away from the manufacturing infra space to the consumption banking space, and hence overall market returns might not be as strong double-digit 20% plus as in the past, and would be moderated down to a mid double-digit kind of a return in the market.
Mid double digit is still not a very bad number at all, Sunil. So we'll take that. And of course, a bit of a churn to the underperformers, the financials and consumptions might be on the cards for this year. But Sunil, hold that thought. We'll do one thing. We'll slip in a very short break. We'll shortly be back and discuss more stocks with our guests.
Back with closing trades right here on 18 now, and the closing trades surely are getting wobbly, so we've now given up most of our morning gains, dipped into the red, and now again beginning to see just that wee bit of a perk up. Having said that, couple of stocks which are holding out well. Adani Ports, of course, has been a big mover today. There's TCS, Indus Tower, and then of course look at the spike up that you're seeing in Spark. And this is not just today's move. Even yesterday the stock was a big mover in trade. In fact, in the last 7 days, the stock has actually managed to post a stellar 60% off again. But what's been sparking this move? Let me take it across to Srishti and find out exactly why. Srishti?
Well, yes, a sparking move coming in on Spark, which is a Sun Pharma subsidiary, and this research division, the stock has done pretty well in the past 7 odd days. We have seen the stock jumping around 60%, and one of the key triggers for this particular company is their ongoing program, which is related to the Parkinson disease. The drug is actually under the phase 2 trial, and the company has announced that they're going to be coming up with an update on to their trials, as well as some more updates awaited in the analyst analyst meet, which is going to be tomorrow. So tomorrow we're going to be having an analyst meet for an update regarding to their vodobatinib Parkinson disease program, and along with that the company will also participate in JP Morgan's healthcare conference that will be on 10th of January. So definitely a lot of interest coming in on Spark when we talk about this particular drug. Then vodobatinib is undergoing the trials for 3 critical indications, not just for Parkinson's. This is also being treated for the Alzheimer's disease. So all these trials are going under process, and Spark recognizes that vodobatinib is a breakthrough in the study of the brain-related disease. In the trials that the company has done earlier, one of the reading was there in October 2023 as well, and the company has come out with great results on that particular research. And along with that, the analysts are anticipating that the interim analysis completion can be done by March 2024, and Spark aims that the interim readout and the phase 3 initiation could be by November 2024. And another interesting point is that if this goes through, then there could be more collaborations coming in, because this could be a breakthrough drug for Spark, because the potential peak sales of vodobatinib for Parkinson's disease is valued at $5 billion. So the market opportunity is quite huge. This is undergoing trial, and if this goes through, it could be a big trigger for Spark, not just for the treatment of Parkinson's, but also it's being treated for Alzheimer's, which also has a big potential. So that's why we are seeing no stopping on a stock of Spark. So all eyes will be on the analyst meet as well.
Oh yeah, absolutely. If the drug does manage to get final nod coming in and does pass through all the regulatory moves, this is going to be quite the breakthrough if it does materialize. That's Spark in trade for you. In just the last 7 days alone, it's managed to knock out almost 58% of gains. But Sunil, a lot of pharma interest as well coming back. A lot of pharmaceutical stocks as well we've seen have really seen that revival come in. And, you know, in the absence of IT, pharma is being looked at the best hedge in terms of a defensive play. What do you make of whether pharma is good for an investment?
Nothing is good, because I just spoke a few minutes ago about the reallocation of capital away from the manufacturing infra capital goods space, because of it's run a bit ahead of the numbers. So I think that reallocation, pharma will also be a beneficiary, because if you look at FII flows, right, when they come into an emerging country like India, they prefer safer stocks within a risky emerging market. And historically, IT has been their favorite. Banking was also been their favorite, but FMCG included. So now if you look at it, IT, because of the world slowdown, the prospects are not looking great. So a little bit of valuation correction upside will be there, but not from a growth perspective. And on banking, you know, I think while in the long term banking is a good play and I expect the reallocation to benefit, the FIIs in our large cap banks, I think probably from a valuation, because if you look at it, the large private sector banks are mostly retail oriented, and you've had the recent RBI regulations around retail lending and around NBFC lending kind of cool things off a bit there. So I think the next journey is a more of a corporate bank kind of a journey, and so from a large cap bank's perspective, you know, that strong buying will probably take a bit of time. So I think pharma is the beneficiary, because pharma is a business which is resilient to economic downturns, right? It's because people falling ill and needing medical treatment and all of that is constantly being a continuous demand. So the volatility of pharma is less. Second, I think Indian companies, the non-software services exports, right, in management and professional consultancy, pharma is a big place there because of our vast resources of the PhDs in the pharma and the scientists and all of that. The third thing which is helping pharma is that domestically post-COVID, there's been a huge shift towards people taking more insurance to protect themselves, and diagnostics and hospitals all are seeing a surge in their business once people insure themselves. So I think the domestic pharma story adds value to an international, which is more of a generic and product kind of a story, to a more of a hospitalized. So a broader pharma pack is tending to get a lot more buying support. And I would say, yes, it's a safety pick. It is proving to be among a better one than IT at this point in time.
The stock price moves as well. Sunil, good to have you on the show as always. Thanks for taking the time out and speaking with us. Okay, let's move on and let's get you some closing trading ideas. Of course, we'll have that exclusive with the coal minister himself in just a short while from now. But Kunal, let's have your ideas first.
So I'll go with a defensive name. ITC is something which has been on my radar over the last few days. the stock has climbed up about that 470 levels, and currently I think at 475, 477 looks attractive to even buy as well as hold from current levels for the stock. Expecting the stock to move back towards 495 to 500 range pretty quickly.
Okay, Soni, what about your ideas?
Be Excite. I think Excite, we've seen a good support at 320 as per the options data. There's a lot of put writing happening at 320 put strike. So, today's low is also 321.4. So, keeping a stop loss of 320, can buy Excite at current levels for targets of 340.
Okay, let's take a very quick break. A massive recovery playing out for the equity markets. The Nifty Bank has covered most of its lost ground. Nifty as well eking out higher. And we're back at that 21,700 print. Quick break. When we come back, the last half an hour of trade this week.
Welcome back. The markets are showing quite a bit of recovery right now. Nifty is above the mark of 21,700. In the last 15 minutes, we have piled on almost 50 to 100 points. So a sharp recovery at that. Let's take a look whether it's mirrored by the Bank Nifty as well, because that too was underperforming. If there is a bit of a recovery there, it is still in the red, but definitely from the lowest point of the trading session, there's a sharp move. Let's bring on the heavyweights, Reliance, HDFC Bank, ICICI Bank of the world, because these are usually the participants that are able to pull the markets with that kind of ferocity. So RIL for now is pretty much flat. 0.25% is what it's holding up. It's, I think, the IT pack actually which is doing well today. So a TCS, Infosys, L&T, even ICICI Bank for that matter, these are the stocks which are holding up in the green and putting their weight behind the Nifty at this point of time. But we also have Pramod Amte joining us on the show. He's, of course, the head of institutional equity research at InCred Capital. Pramod, hi, good to be speaking with you. I was just going through your note wherein you have made the changes in your high conviction ideas for the month of January. And it seems like it's a lot more tilted towards large cap names versus mid cap, etc. Talk to us about what's the rationale, what's the outlook on the markets right now?
So we have been constructing on the markets. Having said that, the run-up in the last 2.5 months has been pretty steep at around 15%. We expect some consolidation to happen in the coming weeks. Having said that, we look at 2024 with a positive inclination as the macro factors are continuing to play out positively, even though our full year target is achieved ahead of time at around 21,000. We expect the bull case to play out as the GDP growth upgrades are coming through, inflation is under control, oil prices again at a relatively comfortable position. So I think we are looking at still a 5% upside from the current levels by March of this year.
Right. Pramod, this is Vinny joining in the conversation as well. That's your market setup that you're talking about. Any specific sectors that you would like to look at or you find very, very attractive in the current market?
So you were right, we were more inclined towards large caps, which has relatively underperformed versus the mid and small caps. That's where our relative comfort lies in. In terms of our high conviction, where our comfort is definitely we are added in our high conviction list recent last 2 months. If you look at more on finance names, State Bank of India relatively risk reward looks favorable to us. We are added Shriram Finance, and the recent change has been the small cap for adding up some distilleries.
Interesting there. Let me actually get Soni also into the conversation. Soni, a sharp recovery in the last few minutes itself. What do you make of it? And TCS, Infosys, of course, we talked about the IT pack, but you also have ICICI Bank and Axis Bank, which have managed to show a bit of an outperformance mostly throughout the week now.
Right. So I think likely I just mentioned that more the indices being in a sort of a consolidation mode, it makes sense to always buy in the lower end of the range, and that's exactly what we've seen. The sharp recovery has come from the support levels, and if we specifically talk about just ICICI Bank, it is. It's in a decent consolidation itself. So 980 being on the lower end of the range and 1030 being on the higher end of the range. So ICICI Bank is going to consolidate in this range particularly. Anywhere we see it coming towards the lower end of the range, towards 990, 985, we can enter in those dips with the stop loss of 980 and then look ahead for targets of 1020, 1025. So that's how ICICI Bank is playing out. Axis Bank, on the other hand, is on charts is looking better than ICICI Bank as of now. So Axis Bank is definitely heading towards its a resistance of 1160, which it can take out. And the moment it's done above 1160, it can head towards 1180, 1190 levels. On the downside for Axis Bank, 1120, 1118 plays a very important role. So I think keeping those as stop loss, one can still look for the higher targets of 1160 and 1180.
Okay, that's Sony's view. But Kunal, what's your view coming in on the markets as well, this recovery that we're seeing? And, how should one actually be reading this part of the recovery, right? We've seen a bit of a flip-floppy, like one day you see it trading in the green, suddenly in the last half an hour you see it falling in the red. Now today, it's the reverse case, you're seeing a recovery again coming back. What should one read from
I think one
this?
should not read the
Read at all? We should
not
just
read at all,
relax.
because we are not
You're
going
already in
anywhere.
the Friday and the
Yeah.
weekend mode.
Yeah, absolutely. But we are not going anywhere. I think we've been to this 300
True,
point range,
yeah.
and volatility, minor volatility of 200, 300 points on the bank Nifty, 300, 400 points on the bank Nifty, and 100, 150 points on the Nifty actually doesn't mean too much in terms of signals, because most of the indicators are now getting into that resting mode for themselves. So it may be a process of another couple of weeks where the indices may get into a drag. You might have one-off day where the bank Nifty moves up higher, the Nifty moves up higher, but then effectively these indices fail to cross over above their previous swing highs, as well as don't break below the previous major swing lows. We would call them as a range bound market, and within a range, even if you have such kind of volatility, it really doesn't indicate any kind of a trend as such.
Pramod, coming back to our conversation, and I wanted to make it a bit more stock specific, and correct me if I'm wrong, but I do see that you have added Som distilleries to your list while you have deleted BCL, which is a quasi play on ethanol and sugar at this point of time. What makes you that bullish on Som distilleries, and what's the take on the entire Alco Bev industry? Because today, Sula Vineyards is also on fire clearly.
So broadly, in case of soap, the stock has corrected, and clearly we feel that the market is not fully factoring in the its market share gain in the large beer state like Karnataka, and hence in that context, we clearly see that the risk reward is favorable to soap. Having said that, the other name which we have in high conviction is Global Spirits, which is a beneficiary of the recent revision in the ethanol prices. Whereas BCL, we feel that the post run-up, the raw material cost pressure because of inflation is relatively higher, and hence the risk reward doesn't seem better. So we exit the BCL for high conviction, and we introduced SOM on a relative basis.
Right. Pramod, there's something interesting also coming in is, Signed DLM. That's a stock that you've picked out in the small cap. A lot of action that is happening on that EMS side, or, the traction that is picking up. Signed DLM is part into that as well. What is your thoughts on this EMS industry?
So you are right. There have been a lot of IPOs and fundraising and action in the EMS space per se. Where we would like to look at it is we would within that space look at a high entry barrier business, which exactly fits into the signed DLM per se. And that's where our relative comfort for signed DLM for bagging new orders internationally and able to execute some of the orders as we go forward, especially from the Israel conflict, and that should give them a better exposure there, is what we are trying to play within the space. Followed by this, we also, if you are to look at, we initiated this space a couple of months back, where our relative comfort is after this INDLM, we also like Keynes, which is again entering into the high entry barrier semiconductor space, and hence that gives us a more comfort. So, but we would be looking at more superior margins, high entry barrier businesses to support the high valuation which the sector enjoys as compared to the mass market assemblers.
One sector which I see missing from your entire list of high conviction is actually real estate. Aren't you having a FOMO feeling there, given the kind of run-up that we have seen last year, and even now in a matter of, this week itself, that index is up, what, 10-12%, I think, or at least 6-7% for sure.
Structurally, we have been positive on real estate or the housing and housing-related activity. We don't have a coverage on the real estate names specific, but the way we would like to play out is within the high conviction, we have KI Industries, which gives us some comfort. Otherwise, we have recently upgraded Century in that space, which gives us proxy to both the new home sales and the renovation of the existing home sales which are happening. That's how we would like to position that versus the overall real estate developers.
Sony, what within real estate looks attractive to you?
Yesterday, we've seen the entire pack going up, and no, DLF definitely is at still momentum where you can see it has a lot more space to rally from current levels because it has formed a good support around 335 odd levels. So I think on any dip around 745, one can enter, keeping a stop loss of 735. Sorry, keeping a stop loss of 735, and it can extend the rally up to 780, 790 levels.
But I want to switch gears a bit and talk about some of these mid-cap IT names, Kunal. All of them today. IT is finally doing something. Anisha, you should be happy that it's at least managing and coming back again after talking about it so often. Mid-cap IT names, and Birlasoft is making that list a bit too much in the top side as well. Is that something that is still there is some value? Do you think that is something you would look
I think
at
it's
now?
been one of the best performing mid-cap mid-cap IT stock in the last 6-8 months. I remember, I think, tracking the stock when it was sub 300 in the month of March or April, 300 thereabouts. I think the stock is now at 730, 740 levels, so that was the recent high for Birlasoft. So I think it's been a fabulous chart. And I like the consistency of the trend in the last 6-8 months, where the stock had, once it managed to break past about the 200 and the 50-day moving averages. Post that, we call that as golden crossover, as a strong technical event. Post that, the stock has not yet even retraced back towards its 50-day moving average, let alone the 200 DMA. So that itself is a strong sign of strength as well as consistency of trend for Birlasoft. Even in this last 1 week or 10 days of price correction, the stock has managed to bounce off above the 50-day moving average itself, not even testing those levels. So that itself indicates a sign of strength. These are the kind of charts which we typically look out for when you're when you look to buy on retracements. I think the support for Birlasoft is closer to the 700 mark. So in case if the stock dips down to that point and again doesn't break below the 50-day moving average, that's a good level to enter.
Okay, let's see whether the stock gives you that entry opportunity or not. But important flashes for you at the bottom of the screen as well, wherein the government is saying that they're likely to shrink the FY25 fiscal deficit target by as much as 70 basis point to 5.2% of GDP. Now, 70 basis point might seem small, but for the size of the budget that India has, it's a humongous number. And deficit coming down means two things: either the government is cutting down spend, which doesn't augur too well for the infrastructure of the country, or it means that the kind of inflows that we have got in terms of the tax collections have been strong. The government is backing that it's on account of latter, that this time around the kind of strong economic data and the tax collection has been so strong that it's managed to narrow down the deficit. So not curbing down on spend as much, but it's probably the income side of things which is looking much healthier, and that's why they're willing to cut down the deficit a bit. Of course, the good news coming in terms of the ratings of the country as well as the bond, index as well, because that will usually cool off as the risk becomes lower for the country with respect to the deficit coming down. But coming back to the markets, because that is where all the action is, and since we are keeping it with IT, let me toss it to Pramod as well. Pramod, IT in terms of earnings, people were not expecting too much from Q3, so let's not discuss that. The question is FY25 now, and will the double-digit revenue growth return? Because if you look at the deal bookings, they have been strong, but it's been the case of the clients curbing down their billings, curbing down the spends. Do you see that reversing anytime soon?
I think if you look at, you're right, the clients are closing some of the deals, especially in November and all. Having said that, the larger space, which is the BFSI related work for IT, is still a substantial amount is moving towards the insourcing. And that remains a headwind for FY25 as cost related issues continue to be a challenge for global banks which spend on BFSI space. And hence, still the confidence is not coming through for the IT because of this specific segment, which forms a substantial part of the overall IT spend. Hence, we have been very selective. The only only stock which we are specifically putting in high conviction is more of a tech Mahindra, which is a management effort to turn around and normalize their profitability and bring back the sales growth post that in the next couple of quarters.
Pramod, thank you so much for joining in with us this afternoon on ET Now and talking to us about high conviction stocks. What's your thought on the markets as well? Thank you so much for that, Pramod. But let's move on and bring on an ET Now exclusive for you all. Nikunj and had a chance actually to speak to the Coal and Mines Minister Prahlad Joshi. Let's hear out an excerpt of that conversation from the interesting chat they had, discussing a slew and range of events in terms of coal imports, production, capex targets, everything on this show.
हमने जो गत 10 साल से मोदी सरकार आने के बाद जो कुछ भी बदलाव लाए हैं और स्पेशली अभी 2020 और 21 में जो कमर्शियल कोल माइनिंग के साथ ही साथ तो कैप्टिव कोल माइनिंग में जो बदलाव हमने लाया है उसके जो रिज़ल्ट अभी दिखना शुरू हुआ है। जैसे आप सब जानते हैं कि we were just producing around 500 odd million tons of coal in 2014-15. Today we are reaching almost 1 billion. अगर CAGR के हिसाब से कंपाउंडेड एनुअल ग्रोथ के हिसाब से देखें तो आज उसी हिसाब से हम प्रोड्यूस करते तो मैक्सिमम हम 700 मिलियन टन प्रोड्यूस करते थे, लेकिन वी आर रीचिंग अराउंड 1000 million ton, that is more than 1 billion ton we are producing, and our import will be considerably reduced. And I am assuring the country through you that under the leadership of Prime Minister Shri Modi, there will not be any shortage of coal and shortage of electricity, that is power this time, and this is maintained last year also. But there was some apprehension, but even now I am ruling out the apprehension also, and I am assuring the country, and we will cross 1 billion, and whatever the substitute coal is there, that import will be stopped entirely next year, that is 24-25.
Sir, allow me to just quote you. This is something which you indicated on 31st of December. The demand for electricity by 2030 is going to double, and to cater the needs, the country needs coal. India's per capita electricity consumption will double by 2030. Now, if the demand will double, do you think by 2030, if India has to reduce the dependence on coal, they will be able, the coal mining capacity would be going higher in the same proportion? So one is the demand based, one is the consumption based demand, sir, and second is the import substitution demand. So the coal mining really has to go up in a significant manner in order to comply with both these normals.
One is whatever the target for the renewable and all such things, may it be in solar, may it be in wind or any other for that matter, we are exceeding our target, and target is being completed well before the time. This is a very proud moment for any Indian, because we are able to do that, and we are the world leader in that as far as renewable energy is concerned, and the emission and other such things are concerned. But at the same time, what I have said on 31st of last month is that the demand of electricity is going to be doubled, and even if you produce by renewable 50% of that, remaining 50% has to be taken care of the regular, that is thermal power. And with this thermal power also, how we should go for the sustainability, that is the challenge before us, and we are already working on that. For example, sapling of the maximum trees and using the mined water, all such things we are doing it, and also using the technology, coal gasification, using that, because ultimately coal is available with us, and we are not able to meet out the entire demand through other sources, because very easily available source for many countries including India, it is the coal. So when we are at present, I can tell you, if today whatever the explored coal mines are there, only the stock of, reserve of those coal mines are taken into consideration, we have the stock of more than 350 years, 350 years. So that we cannot, all those coal we cannot allow it to become mud. So how to use it with sustainable, because Prime Minister, Honorable Prime Minister has promised to the world about the emission and on 2070, how we are going to net zero, all whatever the Prime Minister has said, we are committed to that. And using the coal, how we can make sustainable, that we are already working, and work has started, and overall emission pollution, to reduce it, we have taken so many measures, and I am quite confident with using coal also, reducing the emission and making it net zero. With these balance, we will produce the electric power through coal also, through renewable energy also.
Minister Joshi, if you are reassuring and endorsing that there will be no coal shortage in India, do you think the Power Ministry will come out with instructions where they essentially will now request generation companies to stop importing coal for blending purposes? Because up until now, the Power Ministry has still not come out with any instructions where they are requesting DISCOMs not to import imported coal for blending purposes.
I think, seeing at the previous experience, he might have, Power Ministry has issued, but whatever the demand is coming from the all units, power generating, thermal power generating units, according to their requirement, whatever हमारा annual contracted quantity रहता है, उससे ज़्यादा ही हम सप्लाई कर रहे हैं. तो एक प्रिकॉशनरी मेजर, क्योंकि हर बार इस महीने में, इस 2-3 महीने में शॉर्टेज होता है, ऐसे सोच के कुछ सर्कुलर है, लेकिन वो सर्कुलर का उपयोग हो जाए, ऐसे नौबत न आने देते, हम न आने देते, इतना तो मैं एश्योर करता हूँ. What I want to make it more clearly tell in English, that though the circular is there for the import, and I am assuring you that situation will not arise. That is my assurance. As a precautionary measure, Power Ministry has issued the circular, but as it is, I am supplying under the guidance of Prime Minister Shri Modi, I am supplying more than 100% of our ACQ contract, and that will going to be continued.
So the government, sir, had divested 3% stake in Coal India in 2023. Is there any proposal to divest government stake in Coal India more in 2024?
No, Coal India, I am assuring the coal entire country that there is no question. The ownership of Coal India will be always with the Government of India.
A proposal to reduce some government stake. I mean, government may keep more than 51% stake, but could current stake, sir, is now down to 63. Could it come down to sub 60?
That will be decided as and when time comes. But I can tell you, the ownership will always remain with you, because it is the one of the critical sector, and government has decided to retain Coal India with as a government company, and the management will be with us always.
Simplify the roadmap for Coal India and the capex plans for next 3 years and 5 years.
As it is, if I can to quote the figure, we have more than investing 9,000 crores only for the first mile connectivity, and 3,000 odd million ton we are adding the transportation capacity through the technologies. These are all the things we are doing, and the reduction of the overall pollution, that is our main target, and we are working out accordingly.
Okay, so that's the latest coming in from the Coal Minister, 9,000 crore being spent on the first mile connectivity. Coming back to the markets, because there's a good recovery from the lowest point of the trading session on the Nifty. Sensex is very close to that 72,000 mark now, and Nifty also 21,700 thereabouts. But Sony, let me take it across to you and talk about the BTST idea, both at the index level. Is there any trade that you would want to carry forward for Monday, and also stock specific? Because right now the global picture is not enthusing a lot of confidence, because there's a bit of a red on screen globally.
It's Anisha, I think I'll stick to the first topic that I've given in Exide. Exide still looks like a very good BTST idea for targets of 340. And the second pick that I can still look at is IGL. IGL has given a small breakout in the past 4 trading sessions as on the charts above 425 levels. So keeping a small stop loss of 424, you can buy idea as a BTST idea, BTST for 440 targets.
So that's the latest coming in terms of how the index is placed. Kunal, what's your view, both at index and stock specific level for a BTST trade?
So on the index specific, I will still not carry any kind of a trade over here. I think we've been holding on to long positions much prior, so we'll continue to maintain that. But in individual stocks, I'll change my stance a bit towards one sell and one buy. The sell, solitary sell, which I would initiate would be on Escorts. That's a clear weak chart because the stock is now threatening towards breaking below the 200-day moving average. So I think it's very close towards the long-term DMA for itself. So would suggest a sell with a target of 2750, stop loss at 2840. And second would be a buy on Poonawalla FinCorp, something which I've been recommending over the last couple of days. Breakout above 440 has been confirmed, so keeping that as a stop loss, would suggest a buy with 480 as a target for Poonawalla.
Okay, so those are the recommendations coming in, one buy, one sell being advocated by Kunal. But as we are wrapping up the day, there are a lot of big movers from the broader markets. Spark is one stock that deserves mention. It's high by around 10%. I'm not sure if we have Shrishti joining us to talk to us about what's going on with that stock, but do remember there's an analyst meet tomorrow wherein the company will talk about one of its drugs which could be used for Parkinson's disease. The overall market size is quite large for that, and it could be a flagship drug for the company, and that's the reason Spark is high by around 10%. But Kunal, from the entire pharma pack, if you track Spark, because that stock has been sparkling for the last week or so, I think it's up 60-70% in this week itself. And any other name that you like, because Biocon too has been bouncing here and there throughout the week.
So both of them are different charts, because Spark I think is something which was due for a breakout. The stock has managed to show signs of a breakout. I think the breakout point for Spark was around 300 levels, and the stock has climbed more than 30% higher from those levels. So I think it's a very interesting jump for Spark. Of course, the stock is still some distance away from its lifetime high levels, which should be an obvious target for the stock in the medium term after such a kind of a steep up move. Biocon, on the other hand, I think is a very interesting play from a short to medium term play. I think it's an excellent chart brewing up for the stock. It's formed a classical double bottom pattern, breaking past about the previous swing highs. And what I typically like about the charts is the volumes on the weekly basis. And it's one of the best volumes the stock has clocked so far, compared to the last, I think, 2 to 3 years of the stock being a bit more sluggish. So that purely indicates the change of sentiment for Biocon, and this I believe could be a strong breakout candidate, expecting at least another 30 to 40% up move in the stock, possibly in the next 12 to 18 months.
Okay, point taken. So those are some of the top recommendations and the way to trade some of these pharma names. But of course, the week gone by has been pretty strong for the real estate pack, because that index has managed to gain 8%, a solid 28% rally coming in for Sobha Industries. Prestige too managed to perk up around 13%. You also had a lot of these pharma names that we are talking about. Slowly and steadily, Biocon has managed to inch higher by 16%. What did not do well despite the kind of outperformance today has been IT. So that index goes home with a cut of around 2%. LTI Mindtree is one of the weak ones actually for the week gone by. LTI Mindtree was down around 6%, and today as well that stock hasn't really participated. Emphasis, Wipro were the other ones. Kunal, we've talked about the IT stocks which are looking strong. So Birlasoft was one of the names that you like. TCS was the other one that I've been hearing about from you. But what about LTI Mindtree, Emphasis, Wipro? Is there any name that you would recommend as a buy, or even if you have a clear sell idea here?
So not a buy as such, but yeah, I think LTI Mindtree Infotech, that's something which could probably be going into a bit of a sluggish downtrend. I call it sluggish because the indicators are still into a bit of a neutral to slight bearish territory. But the pace of correction in the last 4 or 5 days has been a bit steep. Now the stock is yet to break below the 50-day moving averages. ideally, when you look at the charts over the last 3-4 months, the stock has multiple times managed to retest the 50-day moving average, break below those levels for by a margin of say 3% to 5% broadly, and then managed to recover from those levels, which means at current levels, the 50 DM is at 5600, 5630 for L&T Infotech Mindtree, and I think that could be maybe a near-term target range for the stock, which means another 300, 350 points on the downside is what we can expect.
Fair enough. And before I let you go, Soni, a quick word on L&T.
I think L&T, we are seeing it is looking good from current levels. It has also seen some good, long built positions this week. So on weekly basis, also it is looking strong. From current levels, it is heading for a fresh breakout above 3600 as on options data that I can see. So above 3600, it can head towards 3660, 3670 on a positional basis. So it's a good buy from current levels to hold it positionally, perhaps for next week, and keeping a very small stop loss of 3470.
We let you go, Soni. On that note, have a nice weekend, and ditto for you as well, Kunal. Have a good weekend, and that's how we're wrapping up the trading session and the week. Nifty a bit more tempered, so it's pretty much flat for the week, or a little bit of red if you must. The overall index today is ending with a gain of around 0.2%. The outperformance was clearly in the mid-cap and small-cap space for the week gone by. Both of those indices managing to report over 2% gain. But if you're looking at sectoral performance, nothing can beat the kind of shine that the real estate pack had. So 8% gain there, with the likes of Sobha, DLF, Macrotech leaping much forward. Pharma was the other one. Then the PSU banking space, energy and FMCG also managed to bounce back. It was IT which was under pressure, followed by metals. Autos too did not have a great week, given the fact December report card wasn't that strong for the trading session today. But however, have to mark out the big buzzers. It's Spark, which was up around 10%. Sula Vineyards, which goes home with a gain of around double digit. Endurance Tech was high around 8%. Trident was the other one, which is high by 8%. BEML, DB Realty, Motherson Sumi. These are the individual names that showed quite a bit of momentum in the trading session. What did not do well was clearly Shree Cements, down about 5%. You also had DCM Shriram down about 5%. Glenmark Life, Gujarat Fluorochem, GNFC were some of the other names that are ending the day in the red. Having said that, from the frontline index, it was a few IT names that managed to show outperformance. So TCS, for instance, was doing quite well. LTI Mindtree at least ended the week on a green note despite the kind of weakness we saw throughout. Adani Ports higher by around 3%. L&T by the end of the trading session has gained almost 3%, and SBI Life is the other one that has managed to gain around 1.7%. So overall, it's a decent close coming in for the Indian markets, materially off the lowest point of the trading session. Let's see how the next week pans out. It's a curtains down on this edition of Closing Trades. Have a nice weekend.